Hi, I'm David Stein of Money for the Rest of Us. This is a channel on money, investing, and the economy. And today we're looking at Evergrande, a big property developer in China that's about to default on its debt. We don't know what's going to happen, but the stock market is freaking out. U.S. stock market's down over 2% today. Global stock markets are down over 3% in some areas of the world, including China. Why is everybody so worried about this Evergrande? And will we see an Evergrande stock market collapse and contagion due to what's going on? Let's take a look at the situation and dig in and figure out, should we really be worried or will these things pass? So let's first look at the overall return of the stock market. You can see that China is one of the worst performers year to date. In fact, the worst performance in this particular chart, down about 18%. Now, one of the things that we didn't talk about in the video I did last week on should we stop investing in China is the debt situation in China. There is a lot of private non-financial sector debt, essentially companies. You can see the green line. China has been borrowing significantly more as a percent of its economy than other areas around the world, such as the US, Japan, UK, and Germany. And what China is seeing that as they've taken on more debt, the output from economic growth isn't growing as fast. And you see this in a lot of indebted countries. Companies take on debt, they try to grow and produce more, but ultimately the debt balances keep getting higher and higher. And it's very, very difficult in China because this looks at the percent of industrial companies or businesses in China in different regions that are losing money, that are unprofitable. It's astounding, the percentage. Now, many of them are state-owned enterprises, but if you're not making money, it's very, very difficult to pay off your debt. Here's China's non-performing loans. These are official estimates, and you have to take these official estimates with a grain of salt because oftentimes the data is a little distorted, and that's one reason I subscribe to an economic research firm, Capital Economics, or an institutional firm. They have economists and analysts in China so we can get better data, more accurate data about what's going on. But if we look at the percent of bad loans, it's actually not going up. And there's a reason for that. China owns its banks. Most of the banks, they control it, and they don't want a bank contagion. So back in 1999, they set up this company called Huarong to purchase the bad loans from banks. And so if a bank has a bad loan, they would turn to this company and they would buy it. And as a result, the percentage of bad loans wasn't as high because you sort of had this Huarong company. At one point, they were buying 30 to 40% of banks' non-performing loans. This company, as of August 2021, had $238 billion in debt, $16 billion in losses. Its debt-to-equity ratio was 1,333 times. Huge, which is why Huarong failed and was going to collapse. But it was too big to fail. And so it was rescued last month by state-owned enterprises. And that stopped any type of bank contagion. Now, though, we have a different entity. We have Evergrande, the largest property developer in the world. They are also heavily indebted and will default on their debt this week. They have properties in 280 cities, $304 billion in debt, including $18 billion of foreign currency bonds. Debt owned by investors around the world. Now, 45% of this debt is backed by collateral, and much of it consists of housing deposits by households, by families that wanted to buy a home built by Evergrande. China doesn't want to see Evergrande default on all of that consumer debt, those housing deposits. Housing is really, really important in China. And as a result, you're not going to want to see consumers upset. And there's some speculation. Well, will Evergrande actually default? They will default. That's a given. The question is, how will they be rescued? Will it be orderly or will there be contagion? Now, Capital Economics, as I mentioned, they have 50 economists and analysts around the world. Their take is they look at the banking situation, that the banks can absorb the losses. It will hit their equity, but with the help of Chinese central banks, they should be able to control that contagion, and the household home deposits will probably be safe. But the foreign bonds, the foreign currency denominated bonds, will potentially default and not be recovered, and much of the other debt of Evergrande. There's some additional risk, though. This could be a start of a hard landing in China. The economy is already slowing. And construction boom. There's been a 25-year construction boom in China, and that's ending. What China has done is last year they passed some legislation called the 3 red lines, telling property developers they had to reduce their debt balances. And that's what Evergrande and other developers have. But it's hard to do if the rate of housing construction is slowing because there aren't as many household formations. There were 31% fewer marriages in 2019 than there were in 2013. And one of the cultural things in China is to get married, you want to have a house where the newlyweds can live. There's a risk of contagion, potentially. We're seeing that now. Investors are freaking out. But we have to recognize that China makes up only about 4% of the global stock market. And that the People's Bank of China, the Chinese government, they don't want to see a hard landing in their economy. They don't want to see consumers to get hurt. And as a result, they will probably create money to save the households that have these deposits with Evergrande. They'll more than likely restructure Evergrande so there's not a contagion. And if there is, other central banks around the world will continue their stimulus so that the economy hopefully keeps moving along. Capital Economics forecasts China will grow 6% in 2021 and about 4% in 2022. So even if Evergrande fails, the Chinese economy is unlikely to fall into a recession. Now, the stock market can be volatile like we're seeing right now, but I don't see that this situation at Evergrande will spread around the world. Yeah, we're having a few volatile days. It's a little scary if you're an investor. And check out that video I did on should you invest in China. But we shouldn't freak out. We can be patient investors. This will more than likely blow over. And if it doesn't, then maybe we need to make some changes. But for now, hold tight, be patient. Check out that other video. I gave some examples of ETFs that you can invest in that have Chinese exposures, those that have lower emerging markets ETF that have lower Chinese exposure, or even investing in India. Thanks for checking up on Evergrande. Don't worry too much. If you liked the video, you have any questions, you can put those below. Give it a thumbs up and would love you to subscribe to my channel. Thanks.